I am Agam, co-host along with Daniel, and we are doing this podcast, all things fintech. We have founders from different YC companies, non-YC companies, specifically towards solving fintech problems in the US market. We also had a founder from a blockchain company. So this podcast, we are targeting towards uh, just getting the founders and their journey. So why don't you just start with how did you get into the industry and what was your experience till now and how your journey has been so far?
I was back in US till 2015, and I wanted to start something of my own rather than just work for another employer. So that was the thought process. But I didn't know what I wanted to do. So I just decided to come to India with my family and stayed with my parents. I realized that it is not easy to get credit in India for businesses primarily. It is easy to get credit. You are a rated company or you are a salaried employee at a big company. But if you are not one of those, then it's really hard to get credit. So I looked at various options to provide credit to our customers. And then I stumbled upon this thing called P2P, where an individual is giving a loan to another person. So I started a company called Loan Meet with a couple of my friends. We tried to grow that business in India, but for a variety of reasons, we couldn't grow that business over a period of 2.5 years. So I closed that company and then joined another fintech to see, how things are working in India and what I could do down the road. Worked there for 6 months and then met another set of friends and started a company called Carbon Card, where we provide corporate credit cards to private limited companies or slash businesses here in India. So that's how we started. It's a pure bricks model if you want to compare our company with any other company. So we started, there was a good market fit. Most startups could not get any sort of credit, and our card worked beautifully for them. We were able to onboard 40% of all VC funded startups in India, and we were able to grow. We got into YC, we raised funding, and things were going great. After onboarding startups, we faced struggles in onboarding MSMEs because in India, most MSMEs, unfortunately, want someone to come to their office and then sell the product and things like that. That's how traditional banking channels work. We wanted to acquire those customers online, so that was one challenge. Then, because of regulations, we could not issue cards, and then later we could not even continue with existing cards. So we had to close the card business and started looking for alternative lines of businesses. That's when I decided to move out of Carbon and join another fintech, which is into agri-tech called Ninjacart. That's all.
So, question for you. So the company still exists today, correct?
Yes.
And you were a competitor. I wouldn't say a competitor to Brex. You were like using the Brex model. You had 40% of startups, you said, in India. That's a lot of companies.
Yes. Yep. Say that again. What is your question?
Oh, no, I'll let you talk. You were about to say something.
No, yeah. So startups were very open for our product. They liked the digital onboarding journey that we provided. Typically, banks will take, let's just say, a month or so to issue credit cards, and most of these cards were not unsecured. We were able to offer unsecured credit cards through online journey within a period of for 1 day or 2 days. So they were really amazed. They initially thought this is not possible. How can we onboard a business on a corporate credit card within 24 hours? So there was a wow experience, and companies started referring our name to their friends to onboard more and more of their friends. Yeah.
And I guess the company's still operating today, so you handed it off to somebody to run. Mhm. Or are you
So
running it still?
there, I was heading operations. So that includes credit risk, customer support, and compliance. Our CEO is still there. So we were basically six co-founders, four are still there with the company. So yeah, the company is still operating. They're primarily now targeting foreign remittances for businesses, incoming and as well as outgoing, and some new products that they have in pipeline. Yeah.
6 co-founders, so that's a lot. That's a lot of like the normal YC company, normal Y Combinator company is like 2 or 3. So you guys were very out of the norm, having 6 people right out of the gate. How did you guys come together?
Sure. So in fact, six co-founders from two different countries, if you think about. Half of the team was from China and half was from India. So yeah, that's another caveat. But in terms of getting together, in my previous startup, I did speak to multiple VCs, and our CEO and another co-founder was interested in funding my previous startup. So that's how I know two of the co-founders. Since these guys were VCs, they interacted with industry people. So that's how they knew a lot of people. And when they decided that, hey, we want to do Brex, it was a perfect timing for all of us to get together and do something together. Yeah.
I guess funding is kind of out there, some of it. You did some debt financing. Like, I guess 6 people started. How did you pitch like on YC? But you get the 10-minute like Zoom video, correct? Is that what you guys did? 10-minute Zoom video?
Yeah. So we got our initial funding from VCs. And then later we pitched to YCs. So on our YC pitch, we recorded one video for the application. They asked us to come for a Zoom meeting, and there we spoke for, let's say, 15 minutes. I think they were quite certain that we are the right team to bet on. They asked a couple of times, are you sure you want to get into YC? Because most companies come to YCs without any funding. Since we had funding, they asked us twice to ensure that we want to get into YC. And then later in the evening Pacific time, they called us again for a brief discussion. And then in the morning, we got to know that we got into YC. Yeah.
Well, congratulations. I know it's really hard to get in to YC. How did you decide on like what the roles were? Like, because you had 6 people, you have to like parse the team apart, right? Like, so people are working on different areas.
Yeah, so it wasn't so hard because one guy was focused primarily on tech, the other guy focused on sales, I focused on operations, our CEO focused on management and hiring, and then one person focused on accounts and things like that. So it wasn't very hard to decide who was going to do what and what not. People were flexible also in the initial days, since there wasn't much operations, but we wanted to onboard new customers. So everyone tried their best to get new customers. Once we got new customers, then if need be, people focused on operations and trying to increase the sales funnel. Yeah. So we all chipped in. There was never an issue like, hey, who's going to do what and what not. Later, like after a year or so, we did have formal structure like, okay, you're going to focus only on this, and these are your OKR/KPIs. So we did that. But initially, anybody and everybody did whatever it took to get off the ground.
Got it. And you guys are backed by Ramp also. Like I was just doing a little research. So Ramp, the competitor to Brex, invested in
Yes.
you guys?
Yep. So Ramp invested right after YC round. Yeah. So that was a good endorsement from an industry player. Even Mercury invested in us, or Mercury's founder invested in us. So yeah, it
Oh,
was a
nice. So they supported you guys in the early days. Very cool. Yeah, so Aga, maybe you have questions as well. I could keep going, but I'll let you jump in.
Yeah. Sure, yeah. Sunil, yeah, you shared about like you moved from the US to India. What was the shift like? You just touched upon like, it was tough and you had to understand the market. You need to know how things work in India now. So what was the professional shift you found, like, working for an employer in the US and starting your own company in India?
So the US market or US companies are quite efficient at what they do. Unfortunately, we are not there yet for a variety of reasons. Like I will talk about a simple example. In US, when I was working, our lunch break will be around 15 to 30 minutes. Here in India, people take 1 hour lunch breaks. Um, in US, if you show up at the office at 9:30 and you leave by 5:30, you're considered at least a good employee from numbers of hours you're putting at work. In India, a lot of people come late, some 10, some 11:30, and people leave office around 7, 8 p.m., things like that. There is no kind of like a proper structure. It's like, hey, people come at this time and leave at that time. In US, people stick to their time. It's like, hey, if the meeting is at 11 o'clock, then everyone will show up at 11. But in India, if somebody's late by 5 or 10 minutes, people are like, yeah, sure, you know, whatever. It's not a big deal. So that's one difference. Second thing, in US, the regulations are more or less set. You can assume that these regulations are going to be there for a while. There won't be drastic changes. In India, the regulations can essentially kill a particular business. Also, a lot of players in the market do not follow regulations. So now you have to decide, hey, because the other guy is not following regulations as per what is written in the book, do you want to follow and have that negative kind of impact to the business? Because if you follow the regulations line by line, you might not do things that other players are doing, and by doing that you're giving away a market. So yeah, it's not easy or straightforward when you shift from US to India and try to operate here.
Yeah, definitely. It's not gonna be easy to, make a shift from all like from US to India. India is more like a very competitive market. There are a lot of companies coming up. There are a lot of ideas coming in, VC funding. I see there are a lot of startups coming in right now. But in terms of like knowing your customer, like, how's the Indian market different from the US market?
In US, the basic needs are already met. Like before Brex, there was American Express and people were able to get corporate cards. And American Express had good penetration in that market. In India, corporate card is considered a luxury. So that's just one example. If you talk about any other product, most products are at mature stage. So you need to come up with something new or innovative to succeed in US market. In India, if you are able to identify a niche market who needs a product that is working well in US, then there is a good enough market for you to operate in and work. Also, when people look at Indian market, they think about, okay, 1.5 billion people who can basically take your product. But actually, it's not, that big of a market unless you are selling a commodity type of a product that everyone needs. So, like the e-commerce market in terms of users is quite small in terms of number of people as compared to US. But when you look at the population, you might feel that India must be a big market. So yeah, there is a big difference between what you see on the ground and what your market is. Having said that, the Indian customer is quite forgiving as compared to US market because people accept that they might not be able to get it right the first time. And it's okay, because no one is perfect and things like that. In US, since people expect professionalism, I don't think, they will want to try another product if they don't have a good experience. But in India, people are used to having bad customer experience. They are like, it's fine. It's not the end of the world. We can try again. And maybe this time I will have a better service. Yeah.
And that's really interesting. And one thing you touched upon, like, if the product has worked in US and if we can bring it to the Indian market, we can have a good sizing. So I like just like Uber and Amazon, we have Ola and Flipkart in India. Like similarly on those terms, does that work for the fintech products as well?
And it works for some products, but not for all. Because in India, when you are providing financial services, you have to comply with regulations. So if the regulations don't allow you to do something, then you won't be able to. So I will give you one example. So in India, like there are, let's just say, less than 100 private banks. So you need to work with those to offer any banking product. But in US, that number probably will be in thousands. So you have multiple banks with whom you can work to offer different kinds of banking products. Also, the Indian regulator does not kind of like the idea of fintechs offering banking products. But in US, I mean, if somebody wants to become a bank and offer banking products, that is possible. But in India, that's like next to impossible. So uh, I would say that it is not easy to offer innovative fintech products in India because of the regulations and how the regulator looks upon new ideas.
Yeah, I totally agree on that. I recently read about Paytm and so Daniel, just to give you context, Paytm is like PayPal in India and it offers wallet system. They started as a wallet, so it's like a wallet offering, but they've shifted to payments bank and created a product altogether a new product from their existing offering. So recently, like last week, there was a shift in regulation where non and like the companies without banking license they can't run our digital bank and the whole line of Paytm's line of business has to be shut off like and after this month of 29th February customers cannot load money in their bank in the Paytm bank. So that's one thing I recently saw. And Sunil, if you want to throw some light on that, that's a recent experience.
So in India, people do want to play with regulations and try to see what is acceptable, what is not. So I will give you a different example to demonstrate what I mean here. So in US, if there is a traffic red light, most folks will not bother to see whether some car is coming from left or right and then try to cross that. Like red light means red light. I'm gonna stop here. I'm not saying that 100% of people follow that, but more than 99% of people follow that. In India, let's just say, there is a traffic red light. People will try to see, if someone is going to cross from the other side or not, and will try to, cross if there is no other cross traffic coming in. So we'll try to stretch the regulation if possible. Paytm and other financial institutions at times will try to see if they can get away by not following all the compliance requirements. And since business is more important than following compliance requirements, they will at times keep on doing it despite warnings. And then RBI will have no other choice but to basically shut them down. So, from my perspective, RBI did warn the PTMs bank to follow compliance requirements multiple times, but they ignored or they could not, and that's when the regulator decided to crack down. The regulator actually is not so bad to license entities, but if you ignore whatever the regulator has to say, then the regulator does not listen to anyone else and crack down badly on you. But yeah, so there are two different things. One is, let's just say you as a fintech founder wants to offer a new product. That is something RBI will not want to see in the market. But if you are a regulated entity um, and you want to do business, then RBI will not have an issue in running day-to-day business. But if you are not following the basic compliance requirements that they have listed down, then they will come and close it down. You can't argue with them saying that this is right, this is wrong, and things like that. So I'm only going to follow what I think is right. After repeated warnings, if you don't follow, then you have to basically close down the business. There are reasons for it also. Like in India, there is something called chit funds where um, the operators kind of like collected money from individuals and ran away. Um, there were some companies who charged, let's just say, 1,000% per annum interest rates. So since we are a kind of like a developing country and the laws are not followed religiously by different folks, RBI does not is open to a lot of new ideas, and if people flout regulations, they crack it down quickly.
Kind of reminds me of Uber when Uber was kind of just like not listening to regulators with different governments and different states in the United States. They kind of just did what they did. And it was a game of cat and mouse. It sounds like a lot of companies do that in India. And then, I mean, if you get caught though, you go to jail, right? Like, or did they were they too smart for that? Like, or does India not like put people in jail for like that violation?
Very few people get to jail, and it takes a long time to convict someone and send them to jail. So there is another difference between US and India. If let's just say, you know, I paid you $100,000 and you said, hey, I will pay you back after 6 months. And we have some sort of agreement also on that. Okay. Now, I believe a case can be filed in US and the decision to either get the money or punitive action will be done in 3 to 6 months after the case is filed. In India, that final decision could take anywhere from 2 to 5 years. So you have a lot of time and leeway to do things and flout regulations. Yeah.
So you're saying you can get away with it. And why would you not like do what you need to do to build your business? I guess is what you're saying. Like that's what some companies are doing. And but you could go to jail. I'm sure like India, even in India, like people go to jail for horrendous crimes in fintech, right? Like I'm sure that it's happened or not
So
so much.
not so much. It
Really?
will.
So if someone creates a fake-ish bank, it's not quite a bank, it's almost like a transfer company, and then all the money disappears one day because the company just does that. Someone's got to get arrested, right?
So it all depends on what kind of fraud somebody has done.
Hmm.
So if the fraud amount is small, then it might take a while to convict him. But if the
Hmm.
fraud amount is huge, then there will be a lot of political pressure and social pressure to take an action. So it depends on, what kind of fraud somebody has done. Yeah.
I
But
see.
for small amount of fraud, it's not easy to put someone behind bars.
I see. So if a company is trying to do good by the consumer, creating a great experience and like actually creating value, and the government sees something wrong, they can't take too much action too quick. So it'll be a slow process for some ramification in India.
Yes, things take
Okay.
time.
Okay. in some weird way that could create better innovation than the US. I mean, the US, there's regulations and you really can't get around them. Like it's just the way it is, and people have to follow it, or else, you're in trouble, or your company goes bankrupt, or the government seizes it, or, something happens right here. Like, but I guess why wouldn't there be more innovation? Because it's kind of a more laxed environment.
So let's think about this. So let's just say, there is a new product in New York and it's doing great. Okay. Now, that product probably hasn't reached Iowa or some remote corner of Iowa, okay, state. So the typical entrepreneur over there in that remote part will try to see what's working in New York and will bring those ideas in his small town. I mean, he can focus on doing something that nobody um, in US has done, but he has more opportunities to focus on, what is not available in a city and try to bring that instead of focus on trying to do something unique that no one has tried. So that's one way to think about it. In terms of innovation, you will see a lot more innovation on SaaS products coming from India, and I will explain you why that is the case. So the SaaS market in India is not so big for a variety of reasons. So all the SaaS product companies are targeting companies based out of US. So there you need to have either a good amount of innovation or have a pricing advantage. So there you don't have a choice. You have to innovate and serve your customers and provide that wow experience. So that's where you will see a lot of innovation coming from India. But for the Indian consumer, you don't need to spend a lot of your money and energy on innovation. If you're able to provide something that is not available in India yet and do a good job on execution, you can build a large business. Yeah.
Got it. Yeah. So talking about your current company, Ninjacart, right? Is it a quick commerce company or what's the product like?
So we are an agri-tech company. Um, we basically have multiple lines of businesses, but we are mostly into either fresh produce or other agri commodities. So I will talk to you guys about one line of business that we are extremely proud of. So we buy fresh produce from farmers, and then we sell these fresh produce to retailers. Okay. Now, this is one of a kind company in India that kind of like manages the whole supply chain of fresh produce moving from villages all the way to the retail stores that exist in India. So that's one line of business. We have other lines of businesses also where we provide credit to um, large enterprises like ITC or Godrej, so that they can finance invoices of their suppliers. So that's another line of business. Then we provide credit to retailers so that they can buy staples and fresh produce from the market. In short, we are basically covering the entire supply chain of all agriculture commodities. That's what we are doing here at Ninjacart.
So I understand that you work with farmers and tier two, tier three cities, like who are like farming and getting the fresh produce products, and you are bringing it to the retail. So you are dealing with tier two and tier three cities, and like what's the financial situation over there? Are they up for online payments, or they still run on cash? Do they have bank accounts? How's the experience working with them?
Sure. We are primarily into digital payments, so all farmers now have their bank accounts and we transfer that money. So earlier, let's just say 5 years ago, or maybe 10 years ago, a lot of people dealt in cash only. They did not necessarily operate bank accounts. But after UPI slash Phone Pay, Google Pay, and Paytm, people have bank accounts and then they can quickly move money from one bank account to another bank account or make payments. So that has enabled us also to make digital payments to farmers and get money from retailers also in our bank account before we ship the produce. So yeah, in terms of payments, we are purely digital only. And the farmers are definitely from villages, but they are from nearby villages of large cities. So, like from my house, there is a village that's roughly, let's just say, some 60 kilometers, and we basically have one collection center over there, and the farmers come over there and put their fresh produce, and we collect that. From there, it goes to basically one center in the city where we kind of like do a quality check. And from there, it moves to something we call as MDC, which is a place near a cluster of retailers. And from there, we ship it to the retailers every morning. Yeah. So the entire operation, like collecting from farmers to shipping it to retailers, happens within 24 hours at our place.
I guess I know we have a little bit of time left. Just changing topic for a second, like why stay in fintech? Like it sounds like you really are passionate about it. Like how did you even get into startups yourself? Like, you know, like this whole journey for you, it sounds like over the last several years at least, you've been in fintech. Like how did you get into it and like why are you passionate about it? Like what is it about fintech that keeps you there? Because there's so many opportunities.
Sure. So I'm good at evaluating credit risk and manage that credit risk to provide loans and credit to individuals as well as businesses. So that's what I'm good at. That's one thing. The second thing is our country is still credit starved. It's not easy to get loans. So there is a huge opportunity for me to make an impact. And yeah, I mean, there are definitely other areas to work on, but it is something I'm passionate about. And when we provide that wow experience of providing credit to somebody who never got credit, I get a good job satisfaction. Yeah.
Would you say like people don't have like a FICO score there? They don't have like they can't get a credit loan for a car. I mean, is that all possible, or is it like just businesses are deficient in getting loans? Like it sounds like this area you kind of in India, it sounds like there's not as much as the US at least.
Sure. So in India, we have something called CIBIL score. It's similar to FICO, and about 10% of population has a score. The rest of them don't even have a score because they have never taken credit or it was not never reported. So, like I will give you an example. So my dad bought his first home with his own savings. Then he bought another home after selling the first home. And then he bought another home again by selling the second home. He never took a home loan, which is like one of the safest products, and anybody and everybody can get it. He never took a personal loan. He doesn't have a credit card, so you can assume that he doesn't have a credit score altogether. In US, when you're looking at FICO, it does not just come from your credit history, but if you're making regular utility payments or rent payments, your FICO score keeps on improving. But in India, it's primarily on the basis of your credit. So that's something that we're missing here in the country. So yeah, like my current portfolio of retailers um, has a lot of customers who don't have any sort of credit history, period. So then you have to look at alternate data sets to underwrite them. You just can't, use as FICO score or build a model on the FICO score to underwrite them. So there are those challenges that we use to underwrite our customers.
I've heard like India like it doesn't rely on debt as much. So I guess it's a cultural thing where the US, because there's credit cards, people here use businesses use credit cards like to run businesses. It sounds like it's more maybe even fiscally responsible in a sense, like because you're building the business purely on cash. Is that an accurate statement?
So if I talk about my previous generation, then what you said is right.
Okay.
I'll explain you why that was the case. So my father probably would not qualify for a bank loan when he was in his 20s. So he had to basically go to a money lender and get the money. Over there, the interest rates were quite high, and if you did not pay, then you would face humiliation from that guy. So people are like, you know what, I will try to, buy something that I can afford. I will not go beyond it. Yeah. So that's what most folks followed. Like the majority of the investments of Indian folks was in fixed deposits, gold, or real estate. That's all. I mean, people did not even invest in mutual funds or stocks. Now, this is changing. The new generation um, does want to use credit, and they are open for credit cards and other means of credit to basically enjoy beyond their means. So yeah, the shift is happening, but it is slow and gradual. Like in India, individuals don't file for bankruptcy. I mean, you hear bankruptcy only from businesses. Like over there in US, my neighbor could not pay EMIs for his house, and he simply gave the keys to the bank and walked away. In India, there is a big stigma associated with the house. And if for whatever reason you are asked to leave or you leave your house, then people feel like this guy does not know what he's doing, and um, they look down upon him. So there is a lot of social stigma attached with bankruptcy or financial stress, which I don't think exists in US to that extent. So yeah, things are changing gradually, but it's gonna take a long shift to where US is in terms of credit penetration to where India is today.
Got it. I know we're running short on time. We have a little bit of time left. Agam, do you have a couple of final questions?
Sure, yeah. So it was great. It is great talking to you, Sunil. You have really great insights on both US market and Indian market. Uh, One thing you would like to, just share to the audience about if they are making a shift from US to India and considering your experience, like what's one thing you should have known before you move to India from the US or before you decided to move, like something which you would have thought about or something which you have figured out beforehand.
If you're gonna start a company in India, make sure you have good set of co-founders. Um, and if you don't have a good set of co-founders, then don't start on your own. That's the first piece of advice. Second thing is building a business is a long journey and it takes a long time. So have cash as well as patience for at least 2 years before you jump in. If you're moving to India just for a job, then assume that you will be working for long hours in India, or at least spending a good amount of time in Indian office than what you would be doing over there in US. there will be a lot of inefficiencies at the Indian workspace or office. And instead of complaining about it, it's better to accept those and figure out how to navigate. So, yep.
Yeah, definitely. And one such thing which I have experienced I myself, I'm currently in Mumbai visiting from New York. My family stays in Mumbai. One thing I realized pretty quick that, in India we have a social life, like, it takes a lot of your time from your personal time, like, you need to go see your friends, you need to be around your family. You are very much in a cluster of people, like, in that particular scenario, you need to figure out what you want to do and what's your end goal. So that's one thing which I personally feel like, when you're back in India, you get involved into a lot of different things which you don't use, like, culturally you don't get to do in US. That's one thing which I personally experience and I love it. I've been grown up like that, but at the same time, on your personal front, you need your personal time as well, right?
Yes. When I was small, our vacations were primarily going to our relatives' place. In US, when I took vacations, we went to Charleston or some nice place and spent time with the family and friends. In India, when I was small, it was primarily just going to relatives' place and spending time. So yeah, you are expected to spend time with your family and extended family. And if you don't that, then people will make assumptions that you are ignoring them, um, and you don't want to be that guy in the family.
Got it. So different cultures, very different cultures. Awesome. I know we're at the top of the hour. I just wanted to say thank you so much for all the insights today. And this is honestly a great episode, super insightful, honestly, on like just the fintech side. And like you have a lot of experience in it, and I appreciate you taking it like the hour with us. Thank you so much again for being on.
Sure. Thank you for the opportunity. I enjoyed talking to you guys, and I wish all the best to you guys in your journey to Just Paid. Thank you.
Awesome.
And thank you so
Thanks
much.
again.